We have the management, Mr. Siddhartha Mohanty, MD and CEO of LIC with us this morning. Thank you so much for taking time out, Mr. Mohanty. You reported a better than expected profit of 34% YOY. At a time when the companies have accelerated provisioning, your provisions have declined as well. Once again, if you compare to the same quarter last year. What is the outlook on provisioning for the rest of the year, if you could shed some light?
You see, we have done adequate provisioning. Our provisioning coverage ratio is 45.32% today. So 2,669 crore we have provided as against our NPA of 5,888. So I don't feel there is any issue because we have adequately provided for that.
And how do you see your profitability shape up during FY21? Do you expect lower provisions to aid profitability in the upcoming quarters?
You see, despite COVID, we have shown some marginal growth in our revenue. That also you have to take into account. There is positive growth, maybe single-digit growth. There is a growth in revenue. And coming forward, I feel, looking to our experience in July and August, there will be definite growth in revenue. And so far as this moratorium and provisioning, all these issues are concerned, you see, moratorium is for those accounts which are standard up to 1st March 2020. So our objective would be all these accounts are back on track in September because moratorium ends 31st August. So hopefully, because those were standard as on March, we are very much sure they will be on track in September, at least individual retail housing loan accounts. So I don't find there will be any issue in the coming days so far as our provisioning or revenue, all these things are concerned.
Your moratorium book stands at 25% of the company's total loans under management. Given that the moratorium is coming to an end this month, what are the trends you expect or you foresee going forward?
You see, when moratorium was initially given, we experienced some 29% of our 29% plus portfolio, those were under moratorium. But after that, it has been reduced and today it stands at 25% of the book size. And if you see individual retail housing loan, that is just 16%. And number of accounts which are under moratorium, today it is below 12%. People who have opted for moratorium, they have started paying. Last June, July, we are experiencing people, though they have opted initially in the month of April and May, they have also started paying. So we are in retail individual housing loan. That is the major portfolio. So we do not find any problem in the coming days.
So, and you know, one particularly encouraging thing is that you've managed to maintain your asset quality during this quarter despite a very tough macro environment. So how much from within the Morat book do you expect could possibly turn into bad assets? And then in that case, what's your outlook on NPAs for the coming quarter?
Actually, if you see, once government, RBI, they announced moratorium, immediately we swung into action. We have our special team which is monitoring each moratorium account. Officers have been engaged to monitor each moratorium account. They are in touch with the customers and hopefully all those accounts will be on track in September. So I do not see much of issue in the coming days so far as the individual housing loan is concerned. But so far as builder book, there is major constituents, they have opted for moratorium. Let us see. But the builder book constitutes less than 7% of our total book size. So overall, I don't see any problem for LIC Housing Finance as such once moratorium ends.
The pandemic has resulted in people realizing that the need for for an own house or own office. Do you see demand and sales going up with more people wanting to buy their own place? Share with us, if you could, any trends with regard to disbursement trends.
Absolutely. You see, home as a sense of security, that has been further reiterated in this days of pandemic. Now people are working from home. All these new concepts have come, working from home. So more and more people are now going for home, and it is the right time for individual home seekers, home borrowers to go for home. This is the right time because price have been stabilized and they should go for home. Our experience is last 2-3 months, June, July, and till date August, we are experiencing a very positive growth in a retail home loan segment, particularly affordable segment. And if I say my experience in July and August, as against last year, previous year of this period, we are experiencing positive growth. So that makes me comfortable to ascertain that this individual loan segment in the current year, definitely there will be positive growth despite all this economic slowdown and pandemic. There will be some growth in the individual retail housing loan segment.
Right, sir. And you know, if we look at the overall loan portfolio, it's witnessed a very subdued 6% YOY growth. Now, how do you see credit demand panning out across the various sectors? Do you have any forecasts for FY21? And it seems that retail sector being in focus, where would your focus lie within the retail?
You see, within the retail home loan segment, particularly, as I told, affordable segment, there we are experiencing a good growth. And within affordable also, this PMAY, Pradhan Mantri Awas Yojana, that is most popular, and more people are going for that. And we are thankful to government. They have extended this CLSS, Credit Link Subsidy Scheme, up to 31st March 2021. So people take advantage of that because straight there is a subsidy up to 2.67 lakhs subsidy is there. Besides that, we have also launched some products to attract individual retail home buyers, those who are going for ready-to-move houses. We are offering 6 EMI waiver in staggered manner after 3 years, after 6 years, after 10 years, 2 each. So those are very attractive, and as I told people, this is the right time to go for a house. More and more people will go. And besides home loan segment, other segment also, there is some slight growth, particularly projects which are catering to this segment, projects which are for affordable housing. So those also we find there will be some positivity. And our experience is in last 2-3 months, particularly tier 2 and tier 3 cities, from those areas we are actually experiencing growth. Positive growth is there from those areas as compared to big 7 metro. So tier 2, tier 3 city, good growth is there.
All right, Mr. Mohanty, pleasure to have you on the show. Thank you so much for taking time out and chatting with us about the way forward and your numbers for the quarter gone by.